Markets ending last week in record territory. Does this rally have more room to run? We're joined by Jimmy Lee, CEO at Wealth Consulting Group. Jimmy, great to see you. Thanks very much for joining us. What's your feeling for the rest of the year? Do things look good for the stock market?
Good morning, Andy. It's been a lot of fun talking to you all year long because, boy, we've had a wild ride, haven't we? I was looking at a picture from a conference that we had in April, just a few days before we hit the low of the year, and with all of our advisors in the room, and just reminding them that that we could have a very fast V-shaped recovery, which is what's occurred. I do believe that we could have more room to run. I actually believe that we could get close to the S&P 500 at 7,000, which was unheard of to think about in the lows of April that I was just talking about. But I think we can get there. And the consumer in the United States has been very resilient, still spending. And we got a lot of things going on, right, with the mergers and different things that you were announcing earlier today on what's moving the markets right now. And so we have been in the non-recession camp, as you know, all year long. We're still favoring the cyclical sectors. We like financials. We like industrials. We like even smaller cap companies have been doing very well over the last month or so against the large cap companies. And so, while I am bullish, I think investors should be cautious about trying to pile into the names that have gone up so much already. There are some areas that are frothy. And I think that there are spots in the market that are mini bubbles where retail investors have kind of climbed in.
You do say, though, it's something of a Goldilocks environment right now for the American economy. It's not too hot to prevent the Fed from cutting rates. But as you say, the consumer is still showing signs of strength.
Yes, we do have a Goldilocks type scenario, right? We've got now the government shut down. We're not going to get the report on unemployment and jobs here. But, certainly the jobs market has slowed. And so the Fed, I think, is focused on that and will continue to cut. And I think the futures market is predicting 2 more cuts this year and only 1 next year. I think that we could have a chance to cut even more. I'm not worried about inflation. I'm not sure if inflation is going to get to the 2% target, but I'm not sure the Fed is so focused on that anymore. And so with lower interest rates, we're starting to also see where deregulation is coming into play. We're starting to hear the news about what Trump had touted potentially with the semi-annual reporting for publicly traded companies in the United States, and just the talk of things like that and lower interest rates, I think, are going to help unlock some of the areas that have been locked up, such as housing. So if residential housing starts to move with lower mortgage rates, then I really do believe that consumer confidence can go up. I think a lot more money could get invested out of the cash and into bond and stock markets, and we could see a higher market. And at that time, I would expect more volatility.
What about the U.S. dollar? Maybe we'll put up a 5-year chart for the U.S. currency. You say it may be oversold, but you do see more weakness over the next year or so?
Yes, I think in the short run, it might have been a little bit oversold, but I think the trend is going to be a lower dollar, which bodes well for international investors here in the United States. And I think it's important, Andrew, to be diversified right now. Again, while the indexes have soared, the market cap weighted indexes, you've got a lot of money in the big companies that have gone up a lot. I think investors need to look underneath the hood, as I've been saying, and make sure that they're diversified so that if we do get a market downturn, maybe their portfolios are more protected. But I think, trying to time the market is foolish, especially for retail investors. And I think investors should rely on the portfolios that they have and the financial plans that they have. And again, earnings have been very robust. Without earnings, I think that we wouldn't be anywhere near where we are in the market.
Although I think you said a lower dollar. Well, what are the implications of a lower U.S. dollar for international investors, Jimmy? Because it's going to hurt them. I mean, if you're outside America holding U.S. stocks, if the currency goes on dropping.
Yeah, I think because of the debt situation in the U.S., I think you're going to see like a cyclical decline in the dollar. I think for U.S. investors that historically are very underweighted in overseas stocks, I think for those investors, it's a good thing. For overseas investors, yes, I think it's going to be challenging. But I think that we've got an opportunity where, the story of valuations being much, much better overseas than in the US. I think, people that put money back into the market, that if they're not in the market, are going to be looking for value. And while, I would caution people of chasing hot stocks, I know retail investors are probably doing that. I think value investors and more institutional investors will be looking for pockets that look to provide more value, which could be overseas markets as well. And so, I think the dollar will go down, but I think the United States market will continue to go up. But like I said.
And Jimmy, finally, gold. Is this a thing that you recommend to clients that they have a weighting in their portfolio?
As you were just saying, I mean, gold's gone up so much that, again, I think it's a play against the dollar. And Bitcoin hitting, highs here is same a little bit. But I think that people should be cautious about chasing gold. I think gold has been one of those hot asset classes. I wouldn't chase it. I do believe that it is a good diversifier and can be in your portfolios. I think you're going to continue to see demand in gold from foreign nations. And so I think it's an asset class that represents a bigger slice of a portfolio today.
And what about Bitcoin? Do some of your clients say, Jimmy, I want to have a weighting in Bitcoin? Of course, as you know, it hit a record high over the weekend.
We do. It's not a lot of clients. I still believe that Bitcoin trades, a little bit more like a NASDAQ stock. But in the firm, we've created a sleeve for investors that includes some alternative assets, including Bitcoin assets. And so investors at the Wealth Consulting Group can get access to those types of assets through us. And we do believe that it, again, is another way to get diversification for clients. And we really recommend that right now.
Jimmy, thank you very much indeed for joining us.
Thank you.
Our guest has been Jimmy Lee, CEO at Wealth Consulting Group.